Hi guys, I'm Stephen Edwards, the Director of CTA, Profit First Accountants. So today I want to give you a little bit of an overview, a summary of Profit First. So you might have never heard of the term, you might have seen our website or seen something on the internet and have no idea what it's about. Even some of our existing clients get confused. What is Profit First? What is it about? So I'm just going to give you an overview. So it all started initially from a book being written. So Mike Michalowicz, there he is there in that picture. He wrote the book. It must be the best part of 10 years ago now, I guess, possibly even more. And without going to too much detail with the history, because I want to give you some practical tips in terms of what is Profit First from a practical perspective, in terms of physically using it to your benefit in your business. So the story is a really sort of summary, top level story, but you can read the book yourself. So Mike was super successful and had a business, and he sold it for multiple millions of dollars. And I think he's probably in his early 30s, something like that. And he was a multi-millionaire, which he admits in the book, and basically thought he made it. He thought he had the Midas touch. Everything he touched turned into gold. He couldn't go wrong. He was a business guru in his own mind, and his lifestyle he got carried away with his own lifestyle, buying fancy cars, going to fancy golf clubs, and the biggest thing he said he did wrong was he invested in loads of other businesses because he thought, this is easy, business is easy. I'll do it again. And long story short, he pretty much lost all of his money, and he questioned how could he go so wrong. And he realised that having these end of year conversations with accountants and financially trained people, finance degrees, accountants, people from a financial background, a lot of it was jargon, and it didn't make sense to what was going on in his business, in his bank accounts, day to day, week to week, month to month. And that's where Profit First was born. And he realised that by watching a commercial on American television late at night, it was talking about the fitness industry, and he realised that the more that something's available to us, the more we consume, and that's called Parkinson's law. So I always give the example: if you go to an all-you-can-eat buffet, do you eat more or do you eat less? I eat a lot more when I go to an all-you-can-eat buffet. If I haven't got at least three plates in that sitting, then I probably haven't got my money's worth. And I also eat like it's going to run out. The food's going to run out. I've got to get out there quickly. And if you relate that to money in your business, if you feel there's plenty of money to go around, you're going to use more money. And you might, like I said, you might even look at excuses to spend that money. And I literally know business owners that do look for excuses to spend their money in their business. Personally. And so Parkinson's law is the more it's available, the more you consume. But if you could trick your mind and change your behavior so basically less appears to be available to you, so instead of having this buffet of food and unlimited plates and a huge plate to fill up, have a tiny plate with nothing else in reserve. Just have a small plate. So if you can metaphorically dish up a small plate of food in your business, which is the money, so basically create the restriction of having less money available in your business, you're going to spend less money. Okay, so this opens up lots of different things about it's a gimmick. It doesn't actually change anything. All you're doing is putting it somewhere else. But we're humans. We're not robots. So this taps into human behavior. Sometimes we know the right thing to do. We know how to go and get a six-pack and eat healthy. But most of us don't have that because you've got to put the hard work in, or we've got to deal with our own habits. And this links into habits to your benefit by essentially creating pots to look after your money. And that concept is not completely new. Loads of people have pots. I'm trying to sip of my tea as well. Loads of people have pots, a savings account, a holiday account. That's not that unusual in business. You have a tax account and all those sort of things. Sometimes a VAT or sales tax account. But this takes it to a different level, and it does it in a structured manner that pretty scientifically works in your favour and promotes more profit and more cash in your business. And that's the background to that. So to give you some practical tips of how it actually works, So the 5 main bank accounts or pots, so they recommend you have different bank accounts to have your pots of money, to basically split your money. So let's say, for argument's sake, someone's got £50,000, leaving that in one account makes them think they've got a lot of money to spend. If they, however, split that and they only were left with, I don't know, £5,000 in their main bank account, their spending account, they're going to spend less money. They're going to look at the business completely different. And you might say, well, that's artificial. You know, what's the benefit of doing that? It's basically you allocate the money for what it's really for. So the 5 foundational accounts, bank accounts, and if you use something like Starling or Monzo or Tide or I think it's Metal, you can have different pots or different spaces. So you can still kind of have one account, but split it into spaces. The more advanced stuff does recommend at least one main bank, but I'll come back to that in another video. So the 5 main bank accounts are an income account, because purely for income to be paid in, so you know what you're working with. Income account, nothing else. And the idea is that pot, that bucket fills up and you kind of distribute the money generally every 2 weeks. So you've got an income account. You've got a profit account. So profit account is called Profit First. So you pay yourself, put aside some money for profit first. And profit in this term is not accounting profit, because most businesses are probably making an accounting profit. This is profit above and beyond what you need to pay yourself to live month to month. Okay. So just to summarize, you've got an income account, you've got a profit account, you've got an owner's pay account. So that's what you need every month to pay yourself, or every week. So technically it's like, it still comes out of profit, but in Profit First, we like to separate it to say, this is the regular stuff and this is the stuff you're putting aside. So income, profit, owner's pay. Then you've got a tax account, and a tax account, not rocket science, putting some money aside for tax. Profit First generally recommend 15% of your real revenue, which is your top line coming in minus costs of sales if you sell goods or you have a lot of costs related to the sale, not typical standard wages. So that's the 4 accounts. Just to recap, you've got income, you've got profit, you've got owner's pay, you've got tax, and the last one is operating expenses, or OPEX. They're the 5 main accounts. So the idea is it goes into your income account, and then every 2 weeks you distribute the money that's built up in your income account. So if you've got £10,000 that's built up, I'm just making up a number because it's a nice round number. It works well for percentages. I'm ignoring VAT on purpose because it just complicates things a little bit. So VAT, if you're wondering how that works, gets stripped out, before you even do your allocations. So you got your income, ignoring VAT. And then let's say £10,000, and let's say your profit is, I don't know, for argument's sake, 10%. So that means £1,000 of the £10,000 you need to put into your profit account. That's 10%. Okay, let's say your owner's pay is 20%. So that's £2,000 you put into your owner's pay account. And let's say your tax is 15%. So that's £1,500 you put in your tax account, and everything you've got left, I think that's 5,500 you put into your expenses account. So you've got 5,500 left to run your business. You don't leave the £10,000 in one account. You split it all up. You're building up a tax pot. You're also building up money to pay yourself, and you can pay yourself every 2 weeks or every month. And you're also building up a separate pot for profit, and profit is used as like a bonus every 3 months or to pay off debts. That's kind of it in an overview. There's lots of more science behind it. You do a lot of expense cutting, and a lot of other accountants kind of think Profit First is a gimmick. Oh, it's just expense cutting. I don't need Profit First to do that. It's doing it on a more psychological level, on a deeper level. It's really drilling into your habits. It's really just linking into your psyche of how you run your business. It's not, anybody can cut expenses, but it's changing your mindset, which is really key. So cutting expenses, changing your mindset with money, and being more controlled in terms of how you distribute the money. That's why we have the percentage system. And I gave you examples. If you want the real percentages, you can go onto our website, go to the bottom, and you can ask for an instant assessment. Where do you have to get that from? I think you've got to go to free stuff, actually. I'll make that a bit easier. Just go into free stuff and you can do an instant assessment. You can book in a chat. If you want to do it yourself, if you just Google instant assessment profit first, you will find some ideas, and it gives you an idea of your percentages. And what an instant assessment does is it gives you an idea what percentages you should be putting by in your business if you're a business owner. So I can see I've hit the 10-minute mark. They are the key concepts with Profit First, and you're looking for progress, not perfection. The way I look at it, it's like getting in shape at the gym. You don't just do it for a week and give up. You need that process. You need that accountability. So I recommend reading the book if you do want to find out more, or get in contact with ourselves, and I'll be happy to have a chat. Thanks, guys. Cheers.